Hey, everybody. Today, we're going to discuss how one moves from the IT tech business into real estate full time. I'm very happy to have with me Mr. Rama Krishna Chunchu. Rama Krishna, welcome to the show.
Thank you very much, Jonathan. Thank you for and appreciate for this opportunity. Thank you very much.
Absolutely. So, how would you best describe yourself right now to our audience?
So right now, I'm I am experienced IT professional and also a multifamily investor, both active and passive investor. Yeah,
And are you completely out of IT now, or you still have a hand in?
yeah, completely out of IT, full time into real estate multifamily space.
When you were in the IT business, what were you doing?
I was into quality side of IT. So yeah.
Did you have your own business, or were you working for someone else?
No, I work for some other company. So
Mhm.
in quality field, like quality lead, quality manager roles. So yeah, then started investing into real estate around 2014, 15. So initially invested into single family space. So multiple deals, single families and townhomes, mainly North Carolina markets. So then working full time and also managing these multiple properties in different locations is a bit challenging. So then I thought of different ideas. Then that's how I came to know about multifamily. So where you can purchase bigger property in one location, and we can hire third party property management company so that they can take care of day to day activities, and also scalability point of view, management point of view, and also loan or lending point of view is much better, going for commercial side. So that's how came about multifamily, then started listening a lot of podcasts and also reading books and doing a lot of research on bigger podcasts, those kind of stuff. So that's how I jump into multifamily space.
So, how did you first become interested in real estate?
Real estate, so it's through one of my college friends. So he was interested in purchasing single families in my market. So where I was lived. So he was interested in purchasing property in this location. So he reached out me and is looking properties in this market. That's how came to know about real estate, and also like the concept, and also appreciation concept, and also cash flow concept. So that's how I started into real estate.
Which market was that?
North Carolina market,
North
uh
Carolina. Yeah.
yeah, or near to Raleigh, Raleigh MSA.
Oh, so you're in Research Triangle? Is that where were based?
I'm out of Greensboro. It's like
Okay.
Chad, near to in between Raleigh and Charlotte, so
So so you started getting involved in real estate because you wanted additional cash flow, and you were investing in single family houses. How how long did you do that?
So I did like at least 5 to 6 years into single family space. So I did like all kind of stuff, like complete renovations, fixer up, or in flips, and also long term holding, like purchase like new town home and hold it for multiple years and resell it. So all kind of stuff I did in single family space.
And why was it that you decided to move on to multifamily from that?
So mainly like I was working full time, and also and my properties are scattered across multiple locations. Managing and all this stuff is a bit challenging. Bringing like tenants, or bringing another buyers for flipping. So it was like it's consuming a lot of time. So I thought like it's not going well. So I need to see different options. That's how I came to know about commercial real estate. I found somehow I found the book and I read completely, and I like the concept of scaling, and big multiple units in single location compared to scattered across multiple location. So I like the concept, and explore a little bit more by into bigger pockets, reading a lot of articles, or all the stuff, reading books like Dave Lindahl's book, and also listening Michael Blank's podcast, all this stuff. That's how I came to know about multifamily.
And so how did you actually get like, what was the first step you took into multifamily after you kind of did all this research and reading and whatnot?
So I joined the mastermind group. So then I learned about analyzing markets, market cycles, all this stuff, underwriting deals and the capital raising concepts, asset management, all this stuff. Then I started, underwriting a lot of deals in these markets, reaching out brokers and getting deals and analyzing deals and touring the properties, all this stuff I did, in such stages. Yeah.
Yeah, I mean, so, but like, how did you, I guess, what was the first deal that you actually invested in? Like, I think you said you started as a passive investor. What
Yeah.
was the first deal you invested in?
Yeah, first deal, like I invested as passive investor. So main reason behind is like to understand the process and understand how these operators operating these deals, and and why they are doing some way, and what are their communication process, how they are communicating with investors, and also like how they are analyzing deals, and how they are managing these bigger properties, how they are raising capital, all this stuff. That is the
Yeah,
reason behind going with passive investing side, and
and
also
and
to build some kind of track record also, it will help.
and,
No track record.
and what kind of deal was it? Can you tell me about the deal itself?
So it's a class A property. It's a kind of fund, and in class A properties scattered multiple locations. So it's a cash and cash is bit low for class A properties, but overall returns are almost 15 to 20 range. I can say there will be better appreciation when they sell the property, but cash and cash is bit low. For any class A properties, cash and cash is a bit low compared to value add deals like class B or class A properties. Yeah.
And how did you identify this fund to invest in?
That I identified through one of my mentors. So he suggested, some other sponsors. So he gave some positive feedback. I don't know, he praised about that sponsor. So that's how I came to know about that deal. And yeah, that's how I identified that deal.
And what about syndications? Did you start investing in syndications as well as funds?
Yes. So far, mainly we're going with the deal by deal basis, not into fund side or fund
Mhm.
model. So yeah, maybe like down the line we may go for fund model. So once we get that, enough track record and enough experience.
But what about you investing in syndication deals? Like, how you said the first one that you invested in was like a fund with Class A properties.
Yeah.
You've invested in syndications as well as an LP, as passive investor?
Yes. Yeah.
Yeah.
Yeah. I invested a couple of other deals in syndications as LP. Yeah.
And then what about the going to the sponsor side? So you mentioned before we got on started the recording that you had started sponsoring deals.
Yeah.
So yeah, how did you break into that?
So yeah, so like last 3 to 4 years, even though I invested passively initially, but always looking for active side. So I was consistently underwriting deals during these properties. So that's how actively involved. So like initially I submitted multiple deals as LOI. So but we didn't got awarded for the deals, but I was keep looking and keep submitting LOIs. So before we awarded my first deal, so I was in best and final into a couple of other deals, but somehow it went to different sponsors. This one is came through broker relations. It's on market deal, mainly in North Carolina market. So it's on market 64 units. Good MSA under Charlotte MSA. So we like the deal. Overall returns also good, so that's how we find the deal. Yeah.
So when you say we, who else is involved? Like, what did you have partners in this deal?
Yeah, so I partnered with other experienced partners, couple of other guys. Yeah.
And so what's your role on the team?
So my role in this deal is like mainly acquisition side. So I find the deal, and also I did initial underwriting and also acquisition side, involved heavily into acquisition side, and also I raised a little bit capital. So and also part of the asset management team. So involving like day to day or weekly asset management calls, and involved heavily there.
And what are the roles of your other partners?
So other partners, so they also involved on acquisition side, due diligence, inspection side, and also raising capital. So heavily, I depended on other partners in raising capital. And also since this is my first deal, so we brought in experienced operator for asset management role. Yeah.
And how big a deal was this in terms of like the purchase price?
Price is like 5 millions, 5.1 millions, so 80K per door. Yeah.
And what's your plan? Is this a value add deal that you're planning to, rehab, or what's your business plan for the property?
So for this deal, like it's a value add deal, class C property. So when we acquired, there is a lot of management issues. So plan was to fix that management issues and renovate some kind of business plan, implementing interior and exterior renovations, and also increase the rents, and increase the value of the property, and resell the property. That is the business plan.
And how do pulling off the value add is often like a very tricky proposition.
Yeah.
So you need experience, or have somebody with experience who can do the renovations. Like, how did you identify, the people to do the renovations for you? Like, for instance, is one of your team members, someone who's experienced with renovations, or did you go, just find a contracting company, or is it through your management company? And how are you actually executing on the value add?
So one of my partner, they have experience in managing multiple properties. So we have property management also. So through that relationships, we bring in like third party management, construction or renovations team. So that's how we hired third party construction. Yeah.
And so your partners, are they just partners for this one deal, or is this a partnership where you guys are always looking at deals together?
So for this deal only, so it's a deal by deal basis. But for that deal, I partnered with those partners.
How did you find them?
So through thought leadership, social media, and also podcast, that's so, and also conferences. So I attended virtual conference. Through that, I found one of the partner, and also through social media, and also one of the partner, they came to my podcast. That's how I find another partner in this deal. Yeah.
So you have the one deal under your belt, so far, that you're I assume are you still in the middle of the value add on this deal, or have you completed the value add?
So we completed the value add. Yeah. So I'm keep looking for deals. So I'm keep underwriting deals, and also submitting LOIs. So the deal flow was a bit slow compared, last year and this year. Very few deals are coming, and also and also I'm underwriting specific criteria, like 80 plus units, and also built after 1980, and the good locations and medium household income also, at least 3 to 4 times of the projected rents. So my underwriting criteria is a little bit stricter compared to first deal. So it's very few deals are coming into this market, and also whichever deal makes sense, and also it meets my investment criteria, like at least 5 to 7% cash on cash, or above 14% IRR, so if the deal meets that criteria, I'm submitting LOIs. I'm keep looking, actively looking, keep submitting LOIs. Yeah.
And are you still primarily focused on North Carolina?
So at this point, I'm focusing on North Carolina and South Carolina markets. So Raleigh, Charlotte, and Greensboro, and Greenville, South Carolina. These 4 markets I'm mainly targeting. These are like good markets, as well as I'm also local to these markets. I can go within 2 to 3 hours all these markets. So that is the main reason behind choosing these markets. Focusing on very few markets, hyper focus on few markets, so that I will get better. I can build better relationship with brokers, and also find good property management companies, or finding good teams, building good team possible.
And so tell me, when it was that you decided to go full time into this, leaving IT behind and becoming a real estate investor full time. When you did that, and kind of what was behind that decision? Why did you make the decision to do this full time?
So main reason is like I worked like in IT field more than 15 plus years. So I thought like I was not really, fully enjoying that role. And also, and also like I really like the real estate concepts and real estate stuff. And also I'm getting, good traction that time, and also involved heavily like, building thought leadership platform like podcasting, or also organizing virtual conferences. I really like I enjoying this, this side of investing. So the and also I took the leap of faith, and also I believe myself and I can get success in this real estate space. That is the main reason behind leaving my IT job and also jumping into multifamily or real estate space full time.
Do you, so, if you're in the markets every day, presumably sort of looking, trying to find what deals are out there that meet your criteria,
Yeah.
what are you seeing in the markets right now? Like, what is it? I know, deal volume is way off, listings are way off, but what are the kinds of things that you're seeing and hearing right now?
Yeah, definitely. Like you mentioned, deal flow is very, very slow, very low, last maybe 3 to 4 quarters. Uh, what I am seeing is like, there are multiple things, right? One is the lending side, lending is very, very tight now, very bridge interest rates went up. So that is the reason now bridge is completely, out of scope, like because interest rates are more than 8%, so we cannot go with that. And mainly option is like agency debts like Fannie or Freddie Mac. So for that also we occupancy should be at least 90%, then only we get agency debts. So and also interest rates like around 6% or above 6% depending on loan size. um and LTVs are very, very low now, I can say 55 to 65 range only. So as investors, as a sponsor, we need to raise more capital for loan, and also for capex or reserves, all this stuff we need to raise from investors. Either like if you go with bridge side, so we get capex from the loan itself. So and also LTVs are 70 to 75 range. Now it's completely different. And other options are loan assumptions. So some deals where we have so less interest rate or low interest rates, and but for those deals also we need to bring a lot of equity. LTVs are coming around 45 to 55 range, for those kind of deals. So these are the some stuff I'm seeing. And also insurance rates, all the markets increase, like not only Florida and Texas, even North Carolina also is almost it increased like almost 2 times. Earlier it's 250 to 300K per door, but now it's like 550 to 600 range in interest rates. So these factors also including in my underwriting. Other factors also, expenses also went up, like because of labor costs or material costs. Earlier we underwrite with 2% escalator, so but now it's I'm underwriting in more than 3%, or and keeping enough reserves for renovations also. All these factors I'm including. Yeah, these are the things I do see in the current market.
Are you seeing anything on the kind of foreclosure or distress side at all?
I do see like some markets. Yeah, I'm hearing some stuff in maybe Texas, Houston markets. I do see that. So yeah, definitely there. We can expect maybe next year a lot of this kind of stuff.
Are you seeing any foreclosures hitting the market in the markets you're looking at right now?
No, not really. In my market, I didn't see much, but there are deals. So there are some deals coming, but they have some, some kind of, uh, cap rate issues or something like that. Yeah.
So what are you kind of looking to do? Looking forward, growing this business. What is your goal here?
So my goal is purchase value add deals like C plus or B class properties built after 1980s. Maybe I'm thinking to change my criteria from 80 plus units to in local market. If we local to Greensboro, maybe I'm thinking to below 80 units. So finding multiple properties in within some same sub market, that is one criteria I'm looking. And also maybe expanding into other markets through strategic partnerships, those things I'm looking, uh, and also building strong thought leadership platform and expanding that, podcasting or conferences, those are things I'm exploring.
So I was actually curious. So who do you raise money from? Is it primarily other IT professionals, like from your network, or like what do you have a kind of target avatar investor, or is it just more you go out there networking and you meet who you meet? What's your approach to raising capital?
So I have multiple options. One is like friends and family, that is one option. And also I build a thought leadership platform, podcast, and all this virtual conference and also social media. So I'm exploring that options also, through my conference or podcast. I'm also getting some leads, and also through social media posting also I'm getting some kind of leads. So I'm planning to explore that routes also. Yeah.
Is there any kind of other thoughts you have for say people listening to the podcast who are, let's just say they're in IT, for example, and they're looking to get started in real estate? What kind of advice would you give them?
So yeah, so identify your own strengths and go for whatever your passions are, if you're not enjoying, yeah, definitely, you identify your passions and go for it, that's what I do. I can give that advice.
Any other thoughts you'd like to leave people with, before we go, sort of final thoughts on real estate or life that you have for people listening?
Yeah, definitely, identify your own strengths and I'll go for that and take extreme ownership, whatever you're doing, you're responsible for your life, your goals. So you need to take that extreme ownership and, go for it.
So what if people want to get in touch with you and maybe join your investor list? What's the best way for them to get in touch?
They can reach out through my website. It's ushacapital.com. And also, I do organize virtual conference. It's multifamilyap360.com. And also, like info at ushacapital.com. These are the ways they can reach out to me.
Well, I encourage everybody to reach out, especially for those online events that you put on. And I'm really happy that we finally were able to make this podcast happen today after many false starts and schedule changes. I appreciate your flexibility very much. Thanks again for your time today.
Thank you very much, Jonathan. Thank you for this opportunity. Really appreciate it.